Welcome back. Since the broader markets is doing well, let's focus on a couple of names. Venus Pipes, that stock is surging in trade. Investec, they have initiated coverage with a buy rating and a target price of around 1,665 rupees a share. They note that the stock trades at around 9.7 times EV upon EBITDA, which they believe offers significant upside. And their target price is at a multiple of around 14 times. They anticipate that the EBITDA CAGR over the next few years will be roughly around 21%. Now, they're making three big points. First up, they say that Venus has increased its stainless steel pipes as well as tubes capacity by around 3 times over FY23 to FY24, which helped the company increase its market share to around 7%. They also point out that their volume growth has outpaced every other player in the industry, as they've reported close to 33% volume growth over the last 5 years or so. That's between FY19 to FY24. Going ahead, Investec, they expect Venus growth momentum to continue. They are building in roughly around 20% volume growth over the next few years on the back of capacity expansion in both welded as well as seamless capacities. Point number 2, they point out that Venus has focused on backward integration, which has boosted the profitability. The company has its hollow pipes capacity, which serves as a raw material, and it's helped it de-risk from dependency on imports, and that's what's aided profitability as well. And because of this backward integration, they have realized cost savings on an EBITDA per ton of around 56%. In FY24, if you compare it with FY22. They've also pointed out that there was an anti-dumping duty on hollow pipes, which would have impacted profitability. But this particular, headwind was avoided because they're backward integrated, and it's resulted in strong profitability. Finally, they know that the company's expansions will come on stream in the coming year, that's FY25 as well as FY26. They're expecting the ROC to decline from around that 19% that was reported in the previous fiscal year, that's FY24, to come down to around 17 to around 19% in the next 2 fiscal years. So putting all this together, the stock is excited in today's trading session. Need to keep in mind as well that the stock has seen a sharp correction from the recent peak, but now Investec believes that it's come out to attractive valuation. So that's why they've initiated coverage on this name.
All right. So